You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Thursday, July 13th. We've got a great show for you today. We're going to be talking about an IPO, robots. Seagate is getting hammered today, and we got a couple of more long shot stocks that we're going to be reviewing on today's show. So let's go ahead, let's jump right in. First one that we got coming up is a IPO that's on the horizon for a company, PETIQ. This kind of falls into our long shot investing series that we've been doing this week. PETIQ, they recently filed that they're going to do an IPO. I don't try and jump on IPOs. IPOs are hard to get into. You need a lot of money, and you need to assure them that you're going to hold the shares for a long amount of time. If you sell them right away, they ban you from future IPOs. So when you deal with an IPO, it's not a get in and get out type of thing, although some people do. But usually it's after they're released and they're on the open market is when you can start making some trades with them. So let's take a look at PETIQ, see what they've got going on. The pet industry it's a booming industry. It's a growing industry. People are, they take good care of their pets. So they have a bunch of different brands of food and different things that they offer, flea and tick prevention. I think they do Frontline and stuff like that. So anytime there's an IPO, you have to take a look at the they give you the prospectus on the IPO, and these things are gigantic. I mean, there are pages and pages and pages of all the information you could possibly want on the stock. And I'm just going to scroll through this here. I'm not going to put a link to this in the video description, unfortunately. I don't think I'm allowed to. Some trading platforms offer these IPOs, others don't. You could probably find it with the one that you have, but you'll have to look at who's offering the IPO. So sorry, I won't put this link in there. But I wanted to show you in case you see a company. Usually the brokers that you use will send you alerts saying, here's the IPOs that we got offering out there. And usually I look at them and it's some banking stock or something, and you just kind of throw it away. This was a very interesting one to come across. So because of the industry that they're in. It's broken down. What you want to look for is what their strengths are, how they're going to grow the company, their financials. They have to list out all the risks there for you, and then their dividend policy. That's what I look at. It goes all the way through who the management people are, who's underwriting the stock, to come up with the valuation, everything. It's all in here. It is just a bear to read one of these. I'm just going to kind of scroll through this quickly and point out a couple of things that I look for. You can see their brands here. Like I said, Frontline is one of the ones that they distribute, and then they've got a bunch of food that they supply. So treats, nutritional supplements, things like that. So, and some of those, I recognize that ones that we use, but so here's they'll do some financial highlights. All the good stuff is in there. And you really want to look at the financials because they'll show you these graphs that show big ups, big downs. And they talk about the pet industry, and, it's kind of well known. Lots of people view their animals as part of their family, so they cite different studies like that. 60-70% of people do that to kind of show you what the industry is looking at. So they then outline their strengths, and take these with a grain of salt. This is, whenever they put something like this together, look at it as a salesman is telling you the best of what they have. So you should be happy with everything that you read here. If you come away with where they're showing their strengths are, and you're going, oh, that's not that great. This is their best foot forward, their strongest pitch of what they've got going on. So if this unsettles you a little bit, move on right away. And when they talk about their strategy of, how they're going to grow the company, again, you've got to be on board with that, because this is their best case scenario they're outlining. Okay, so if you get to that point, and this is early on in the document, don't like it, bail out on them. You can start looking at their financials and stuff. The liquidity, I don't like this too much. They got $1 million in cash and $37 million in debt. If you've seen me when I look at stocks, I like companies with more cash than debt, or depending on what the debt is, what they're using it, how they're growing it, et cetera, et cetera. So I don't like that ratio there. So then they come down to the risks of their business, and they'll bullet point them, and then they go into detail of what the risks are going to be. Damages to the brand, they make cats or dogs sick or something, it's going to throw them off. So they go through all of that, okay? And then buried down in, and like I said, they then take those bullet points and they go into detail of what they mean by those risks. They show how the company's structured. Where is the dividend statement? I just want to show the dividend statement next. See, here's the risk factors where they take those bullet points, and then they go into much more detail on what they're talking about for those risks. So again, you want to look at these and you want to say, okay, is this normal company type of risk? Are they covering all the things that you think are risks to this type of business? And you want to be happy with what they're calling out as risk, and you find them as reasonable and that their strategy overcomes it. Again, if you don't agree with their strategy and what their best estimates are, then bail out on it. You don't want to invest in the company. Scroll down here. It's coming. I'm not even halfway through the document, by the way. And we're on page 32. So it's an evening of reading when you go through one of these. I know the dividend is coming up here. Dividend statement. Use of proceeds. Okay, here we go. The dividend policy. Obviously, if you're a dividend investor like me, you want to look at this. Now, they'll declare here if they plan on paying a dividend in the future or not, what they're going to do with the extra cash. They intend to retain all available funds and use it in the operation of the business to grow the business, so they do not plan on paying any cash dividend to the Class A stockholders. So I can't bless this one because of the dividend policy, but we're going to keep an eye on PETIQ. I think it's a decent company. Don't like some of the cash that they have on hands and the fundamentals there. But this is an interesting company getting out into the pet market, and it could be a good investment there if you want to own the stock and have it appreciate over time. They're not paying out the dividends, so don't like it there. But I thought this was an interesting IPO. Those are some of the things to look for when an IPO comes across. I use E-Trade for my online brokerage. Depending on the one you use, you'll get different ones, and it'll show them. They're hard to get into, but it gives you some ideas, and you can look at more detail on the company as it's coming out. So as it gets into the open market, you can see what you got going on for them. Let me know what you think. PETIQ, is that an interesting investment? Would you get into that market? Let me know in the comments below. That's it for today's show. Let me know what you think in the comments below. Give us some feedback. We enjoy hearing from you, and we're trying to grow the channel. Subscribe if you haven't already, so you get the latest investing news for gamers. Watch us live Monday through Friday, 1:30 Eastern, 12:30 Central. Thank you for watching. We'll see you tomorrow.